Goldman bombshell: AI is set to devour the ad industry. A $470 billion profit pool is about to be reshuffled. While OpenAI is still burning cash like crazy, losing $5 billion a year, and Elon Musk's shy is painting big dreams, a bleeding even more expected to lose $13 billion in 2025, AI may have quietly found its real moneymaker: advertising. Goldman Sachs just dropped the mic. The advertising sector, especially digital advertising, could be the first major goldmine that AI disrupts and rebuilds. There's a $470 billion profit pool waiting in the wings, ready to be gradually swallowed by AI. And how exactly will that happen? Think of it as AI devouring the market in for big bites. Bite 1. Traditional ad budgets go digital faster. A $170 billion opportunity emerges. Goldman says that with AI on the scene, ad dollars will shift even faster from traditional channels, TV, newspapers, billboards to smartphones and web platforms. In recent years, digital ads have gone from under 50% of total ad spend in 2017 to nearly 70% by 2024. Now, with AI joining the party, this digital migration is shifting into hyperdrive. Translation: if ad dollars moving online used to be like driving a Prius, AI is switching on Tesla's Plaid mode. Step on the gas, and you're staring at a $170 billion growth lane. Bite 2. Creativity no longer needs humans. $114 billion in savings ahead. Ad creation used to be labor-intensive and expensive: scriptwriting, filming, editing, and often got rejected and redone. Now with generative AI, you can whip up scripts, images, and videos in minutes, slashing costs. Example: Kalshi used Google's new Veo 3 text-to-video AI to create a commercial aired during the NBA Finals for a fraction of traditional production costs. In short, ad creatives may no longer need sleepless nights making decks. Just feed some keywords to AI, and voila, Hollywood-level ad done. Annual savings could hit $114 billion. Bite 3. Middlemen's brick-moving days are over. $25 billion under threat. Did you know how many middle layers an ad used to go through before reaching the audience? TSPS, SSPS, TMPS, buzzwords galore. These ad tech middlemen made up a $25 billion intermediation empire. But now, Google's Performance Max and Meta's Advantage Plus have baked all those steps into one AI-powered platform, fully automated from targeting to delivery. Goldman puts it bluntly: these intermediary layers are going the way of old-school taxi dispatchers, as ride-hailing apps did. That $25 billion pie is getting resliced. Bite 4. Ad agencies should brace themselves. $161 billion industry under threat. Ad agencies used to be the darlings of big brands handling strategy, creative, media buying, analytics, you name it. Now Meta says, we're automating the entire ad pipeline. No humans needed. Not joking, the 5 largest global ad agencies, Omnicom, WPP, Dentsu, etc., collectively rake in over $64.5 billion annually, and the broader ad services market is worth $161 billion. Once brand clients go all in with AI for ad campaigns, these agencies may become as obsolete as postal workers in the WeChat era. You get the picture. Winners, Google and Meta, are laughing quietly behind the curtain. So who's winning this AI plus ad revolution? No surprise, it's the giants with scale, data, and deep tech muscle, Google and Meta. Google's Performance Max handles everything: targeting, creative generation, and delivery, adoption. From just 2% in Q for 2021 to 59% by end 2024. Now, 46% of US Google ad budgets go to it. Meta's Advantage Plus is catching up too, from 2% adoption in Q1 2023 to 36% by year-end 2024. It's like the rise of live stream e-commerce. Who wins first? To top influencers with massive reach. Same story here. AI-powered ad tools give platform giants a head start. Smaller players aren't out, but catching up won't be easy. Goldman also names a few promising niche players. Aploven Axon 2.0, focused on mobile app ads, with solid performance. Pinterest Performance Plus, doing well with visual search and AI-powered ads. While these platforms are riding the AI wave, Goldman makes it clear, the biggest slices of the AI ad cake go to Google and Meta. The rest can try to climb up, but dethroning the kings isn't happening anytime soon. Conclusion: in the ad world, AI is the new boss. To sum up, advertising is now one of AI's first real money-making battlegrounds. Unlike OpenAI or xAI, which are still spending wildly with limited monetization, the ad industry is already being reshaped by AI. No need for human creatives, AI's got it. No more middlemen, AI automates it. No need for ad agencies, AI replaces them. No more wasteful spending, AI makes it cost-efficient. But this transformation isn't a party for everyone. In this AI-powered ad race, the giants are sprinting ahead. The smaller platforms are chasing hard. And the old-school middlemen and agencies shaking in the corner. Goldman sums it up with a hard truth. Disposals of AI-driven advertising won't be shared equally. If you're an investor, it's time to think, who's really going to profit from the AIification of ads? At this point, the answer is loud and clear. As the first half of 2025 comes to a close, we're spotlighting for AI stocks we're bullish on for the second half. These are all high-growth companies with major upside potential, some could even double. #1. Aploven Corp. App. Aploven is the behind-the-scenes powerhouse of mobile app advertising. Its ad algorithms are rumored to be so effective, users just can't stop clicking. Recently, it came under fire from short sellers accusing it of data manipulation and ineffective ads. Plus, it was left out of the S&P 500, dashing investor hopes and causing a 20% drop in its stock. But many Wall Street analysts fired back. Don't blame app. They believe its ad performance is actually stronger than expected, noting many users make their first purchases through Aploven ads. Let's break it down. Fundamentals: Q1 2025 revenue, $1.48 billion, up 40% show. Net profit, $576 million. EPS, $1.67, up 149% show. Gross margin, a whopping 80%. EPS forecast, plus 119% next quarter, plus 84% for 2025, plus 42% for 2026. Free cash flow in 2024, $733 million, ROIC over 50%. Technical analysis: stock is consolidating between $330–350 with stable volume and low short-term volatility. Getting support at the 50-day moving average, though facing resistance from the 10 and 20-day lines. Relative strength, 98. Clearly a strong performer. Outlook: low fixed costs, high margins, and a powerful AI plus mobile ads growth story make this a strong long-term pick. Current price, $334. AVG target, $509. High target, $650. Recommendation: buy on dips, potential to double. #2. Marvell Technology MRVL. Marvell is the chipmaker dream factory powering data centers. They specialize in system-on-chip and high-speed interconnect products tailor-made for AI training workloads. Although its recent earnings were strong, the market took a while to notice, but now, people are catching on. CEO Matt Murphy is doing a solid job. Stock has rebounded from $60 to $77. Bank of America just raised its price target from $80 to $90, still urging investors to buy. Why? Its custom chip business is booming. One bold forecast: EPS could reach $8 by 2028, far above Wall Street's current $5 average. B. Riley is even more bullish, raising its target to $115, calling Marvell's next phase of AI growth about to explode. Fundamentals: Q1 revenue, $1.9 billion, up 63% show. Net profit, $650 million. EPS, 62 cents, up 158% show. Gross margin, 50%. EPS forecast, plus 124% next quarter, plus 178% for 2025, plus 28% for 2026. Technical analysis: trading between $76–$80, currently pulling back towards support. Overall trend is healthy. Short and medium-term moving averages are in bullish alignment, but facing resistance at the 200-day MA. Relative strength, 60. Not a strong stock yet, but promising. Outlook: AI, cloud, and 5G growth tailwinds could drive long-term performance. MRVL trades at a relatively lower valuation versus peer suitable for swing or long-term positions. Current price, $77. AVG target, $92. High target, $133. Expected upside, 70% plus. #3. Reddit RDDT, the king of online communities. Reddit has been around forever and knows how to keep users engaged. We like it for its high traffic, low ad costs, and fun fact: more people visit Reddit daily than Netflix. Fundamentals: Q1 2025 revenue, $390 million, up 61% show. Net profit, $3.9 million. EPS, 19 cents, up 102% show. Gross margin, 90%. EPS forecast, plus 410% next quarter, plus 137% for 2025, plus 86% for 2026. Growth depends on better ad monetization and increased community activity. Technical analysis: stock has dropped from its early 2025 peak of $230 to around $143. Currently in a bullish setup, but with high volume and volatility, expect some choppiness. Relative strength, 95. Definitely a strong performer. Outlook: with its strong meme culture and community management, Reddit is seen as a growth play. Current price, $143. AVG target, $149. High target, $220. Expected upside, 50% plus. #4. The mini NVIDIA, Astera Labs ALAB, fundamentals. A fast-growing semiconductor player focused on data center connectivity. Revenue is soaring. Q1 revenue, $160 million, up 144%. Net profit, $53.7 million. EPS, 33 cents, up 230%. Gross margin, 75%. EPS forecast, plus 149% next quarter, plus 61% for 2025, plus 28% for 2026. Technical analysis: trading in a tight $90–$100 range over the past month. Moving averages are converging. Watch for breakout potential on good news. Relative strength, 89. A strong stock. Outlook: as AI computing keeps expanding, demand for specialized interconnect chips rises. Keep an eye on next quarter's orders and big customer partnerships. Current price, $91. AVG target, $105. High target, $120. Expected upside, 30% plus. In summary, our top for AI techs for 2H 2025. APP's strong long-term fundamentals. Buy on DITs, potential to double. MRVL MRVL, ideal for swing or long-term positions, 70% plus upside. Reddit RDDT, strong brand, community-driven growth, 50% plus upside. ALAB, the up-and-coming data center star, 30% plus upside. If you enjoy our video, don't forget to like, subscribe, and ring the bell so you won't miss out on more great content.